The reason why July's jumbo rate hike is a big concern isn't because interest rates are so high right now. The target rate is currently at 2.5%, which is just in the middle of Bank of Canada's neutral rate range between 2% and 3%. But the pace of increase is a lot faster than normal, and that is the big concern for homeowners, especially those who have already been stretched too thin at low rates and are now faced with both rising cost of living plus rising mortgage payments because variable mortgages are now approaching something called the trigger rate. So in this video, I'll dive into what these changes mean for Toronto real estate. But before I continue, if you enjoy content like this, don't forget to give this video a thumbs up and subscribe to our channel so you don't miss other videos like this made specifically for real estate investors in Toronto. If you look at the latest June data, you can see that in Toronto, listings have actually come down compared to the same month last year, and that is helping give support to the 416 market. Sellers know that real estate prices are coming down, and so if they don't need to sell, they probably won't. And they can do this because they haven't felt the full impact of interest rate hikes yet, even for variable mortgages. When you enter into a variable mortgage with the big banks, your monthly payments are usually fixed based on the rate you get in at. Here's an example. If you got in when variable rates were at 1.75%, then the monthly payments will be calculated based on that entry rate, and you'll be paying $3,400 per month for a $1.2 million property with a 20% down payment and a 30-year amortization. Then, if interest rates go up, the monthly payment might still stay the same. What happens is that the interest portion will go up and the principal portion will go down as long as interest payments don't exceed the fixed monthly payment of $3,400 per month, which is what most homeowners are still experiencing right now. But rates have come up 2.25% already, and any more might mean that monthly payments will start coming up. If we end up seeing 3 more rate hikes by year end, that same homeowner with the $3,400 original mortgage payment might have to pay an extra $700 per month. And this will definitely weaken holding power, and some might be forced to sell even when prices are a lot lower. And here comes the million-dollar question as always. How much lower will prices go? So let's take a look at it from 2 angles. For most of us who have to buy with a mortgage, our buying power will be reduced because stress tests are starting to get harder than before. In simple terms, after this point, we're going to be looking at around 16% less purchasing power from the mortgage side once variable rates get to 5.25%, which is possible by the end of this year. We can also look at it from another angle. Even if a buyer doesn't run into mortgage qualification issues, they will still be affected by higher borrowing costs when variable rates get to 5.25%. For those who invest in houses in Toronto and are looking for positive cash flow, prices would have to drop 25% from peak prices to maintain the same cash flows, even if we factor in an increase in rents over recent months. Now, it's also possible that more and more investors will start to become more comfortable with break-even cash flows when interest rates peak, as long as the purchase price is right. Most investors make numbers-based decisions, and so they might take the view that interest rates are cyclical and are okay with lower cash flows right now because they know cash flows will improve once rates come back down. Now, if an investor ends up being okay with break-even cash flows, this means 416 prices for investment properties that are houses don't need to drop as much at 18% from peak prices. And then let's take a look at Toronto condos. The upside here is that rents for condos have increased a lot more compared to houses in the past few months. But just note that at the same time, condo cash flows are negative and there's not much more room for negative cash flow to come down even more. So even with faster growing rents on the condo side, we might still see a 21% drop from the peak for condo investments in Toronto. So if we bring it all together, here's where we might be at. For end-user properties, which have already dropped 21% in the suburbs and 16% in core Toronto, there's still probably a long way to go if we expect purchasing power to drop by 16% by year end. Just like how end user markets are more likely to overshoot, these markets are also likely to overcorrect too, so it is possible to see even bigger drops than 16%. So will we actually see prices drop by that much? Well, I think that it depends on the homeowner's holding power. In the suburbs, 905 detached homes shot up by 70% over COVID. So I'd say that a lot of those homeowners are stretched pretty thin already, and we'll probably see a lot more of those homeowners being forced to sell at lower prices. Investment houses have come down 13% in the 416. If we expect an 18 to 25% price drop from the peak, the best case might be a 5% drop, but it's also just as possible to see a bigger 12% decline. Finally, Toronto condos have fallen 7% so far from the peak. So if there's going to be a 21% price drop from the peak, then we might see another 14% drop in the Toronto condo market too. And one final note about timing, we think that investment property prices are going to come down more quickly even before interest rates start to hike, because more and more investors are future-proofing their buying decisions with future projected peak interest rates. And user homes, on the other hand, might end up lagging and following interest rate hikes, so you might see prices continue to fall throughout this year and also next year. So if you're looking to catch the best real estate deals, you better keep a close eye on the market over the summer. Here on our team, we're a real estate sales brokerage that focuses on investing in Toronto. And so if you want to talk more about Toronto real estate, or if you want to learn more about how to get started in investing in real estate in Toronto, just reach out. We'd be happy to take a look at your situation, give you our best recommendations on how to get on the right track, and once you're ready to buy, our sales team will help you buy it, offer renovations guidance, and help you with leasing or property management if you need it. So just connect with us if you want to learn more about our services by heading to the link in the description below. Don't forget to give this video a thumbs up and look for us on Facebook, Instagram, or LinkedIn if you want to hear from us more regularly. I wish you all the best in your real estate investing journey. Thanks so much for watching, and I'll see you in the next video. Bye.